I think it's fairly rare at this point. So I guess that was the next question I had, Aaron, is that sort of going the way of the dodo bird and not even happening anymore? Because we don't really hear that much of people doing it.
They're more correspondence. The IRS knows that they make more money on those, I
Okay.
think, even on these factors.
And
So
do you see how the statistical, like, let's say I'm heading into tax season, which for Schedule C or business clients is kind of year round at this point. So I'm just like, I'm in my day right now. I want to see of the 100 Schedule Cs that I prepare from now until, 6 months from now, right? How many of those are going to have, whether the IRS calls it an audit, Darren, or whether it's categorized in some other way, in some other.
yeah,
So that's interesting. As that, I also think that's a little bit counterintuitive to the average point of view. If you mention audits at the time when you're preparing someone's taxes, is that
I
um,
do it in a way to reassure them that I'm there for them and
okay?
that it's not realistic.
And so for kind of the starting point of the factual, um, because there's a fear factor of this topic even at all. So I try to just generally like look at the facts first, kind of get acquainted with the facts. And so if we look at these, the data book stats, right? There's two particular types of individual returns that if you look in the column percentage covered are substantially higher than the other types, right? And so that's income over 100,000, and then returns with the earned income credit. And even if you see the recommended additional tax figures, like look at that bottom number, returns with earned income tax credit, how much more tax. It's like the most one, right? So I guess it's kind of like the kinds of Schedule Cs or the kinds of individual returns that get audited in the past, at least, are fairly well known, but they seem to kind of be broadcasting, right, Darren, that they want to stop doing that or something like that, right? Is that
Yeah,
right?
yeah. Well, and I would say those numbers lead true. I mean, I see way more audit or inquiries on earned income credit and head of household than on Schedule Cs as a whole.
Right. Okay. Interesting. So would you say that in-person audits, particularly of Schedule C, are a good time?
Yeah, well, I prefer them. I hate correspondence audits.
You would rather get in front of a
I
person.
would I would rather get in front of a person. I get, what they want ahead of time. You prep it all with your client and then you show up ready for battle. And you've got that day with the auditor to show it, they accept it or they don't, or you need to get more info. It's just very focused, maybe a day or two with them, and then you're done. There might be a couple of little straggling things, but you can see the look on their face, everything else. Correspondence audits, you ship it all off and then you wait, and your client's waiting. And then getting them to, when they finally do have a question on something, um, then you got to send it in. Then you got to wait another month for them to look at it. And so I just like the expediency of it. You have a date and time. If there's an issue on something, you can work it out with the auditor right there. Also, I find way more leniency in the in-person audits. You can get a lot more through, as to where, like, a correspondence audit, it's just somebody going line by line. They're either going to allow or disallow. And then once they disallow a bunch of stuff, then you got to come back and fight it more on why they should accept it. As to where, when you're in an in-person audit, you can battle it out with the auditor right there. Or if you're doing a good job, I mean, a lot of the times in an in-person audit, I had an auditor, everything else was so organized, and it wasn't even a return that I did. So I totally threw the old preparer under the bus. And but I had disclosed several things that I had already found wrong. And so by the time we got to the depreciation schedule, she was like, look, I already look good at this point. Like, you disclosed all this. It's easy, everything else. She's like, this thing's a mess. I don't even want to have to write it up. Like, you've got everything else organized. So she let like 30 grand in depreciation that shouldn't have been claimed go, which
Interesting.
blew my
So
mind.
because that's pretty counterintuitive, right? Like if you say if the average tax preparer said, would you prefer to have an in-person or a correspondence audit? Probably the average viewpoint would be, oh my gosh, I'd rather get a root canal or several of them at the dentist than do an in-person. So I wonder if we could get some audience input on, so who here has done and let's kind of like confine it if we can, you guys, to Schedule C, since we're kind of on this Schedule C train. Who's done like a full Schedule C in-person audit where you represented either your client or maybe even another client in person in front of the IRS? Who's done that before? And maybe put like a thumbs up, or some kind of indication or a chat that you've done that before, or if you haven't. I think it's fairly rare at this point. So I guess that was the next question I had, Aaron, is that sort of going the way of the dodo bird and not even happening anymore? Because we don't really hear that much of people doing it.
They're more correspondence. The IRS knows that they make more money on those. I think
Okay.
even on these factors. Um, Probably them. I don't know what the statistical rate is, but a lot of people change addresses, everything else, or they get notice of proposed assessments, and the IRS knows a lot of people just pay it. They get a letter, they get scared, they just pay it.
Gotcha. Okay.
And so I would say in-person audits are, I'd say less since COVID. I used to average about one a year, two a year, that neighborhood in there. And well, since COVID, I've had three, but they were all not correspondence, but on the telephone.
Yeah,
But
on
I
the
would
phone.
still, at least I had an auditor. So I would send him stuff, and then we'd hop on the phone and go over all of it.
Gotcha. Okay. And so even though it's not happening a lot, just kind of, so we don't want to go maybe spend too much time on it since it's, people aren't experiencing that much, but like for charging, just quickly, like again, with the eye towards the business side of it, charging for in-person audit or actual live audit representation, how do you approach that, or how could we think about that?
I charge 250 an hour.
Okay, so you do
And
hourly in that case.
yeah,
Yeah.
yeah, on audit it's hourly.
Okay, interesting. Um, and you touched on this. This is definitely something that we see is, so I'm not sure with these statistics. They don't seem to actually address this question, at least not in what I've seen. But it seems that the IRS defines audit as kind of more of the traditional, where it's a live person auditing, and they're, correct me if I'm wrong, or if you know if I'm wrong or right. I don't think they're including like CP 2000s, verification of X, Y, and Z letters, that the correspondence audit. Is that included in this rate, not included, or how does that?
I don't think it's included. But I do know from various things I've read and heard in seminars is, that their focus was going more automated, more, matching letters, correspondence audits, things of that nature.
Okay,
Not the
that's
in-person audit. Like, it's a waste of resources for them, because they can send out one letter and make it a total pain in the ass for the taxpayer. And with, sending the info in and stuff like that, and their back room handles it and everything else, rather than, one auditor getting through like what, one or two audits a day. I mean, I would like to see, I don't know if they publish that info anywhere, but like what the average correspondence auditor goes through a day. They might wrap up like 7 to 8 audits a day, rather than an
yeah,
in-person
yeah.
is either you get a morning or an afternoon. They're generally done in 4-hour blocks.
But right, and you could do max 2 a day, and you're probably so exhausted from battling with
Yeah.
TAs that you like
Yeah. Well,
go
and the
home.
auditors like dealing with tax professionals better. I won't get into it because a lot of people here don't get the, you know, they're not having in-person audits, but you know, I've sat, you know, in in an audit, and you know, I'm just conversing with the auditor, and you know, you don't want to say too much, so I'd even keep a briefcase open on my lap and read a book like while they're working, just to keep my own mouth shut. But you hear the guy next to you, you know, actual taxpayer in the audit, like yelling at the
Yeah.
auditor, like just going bananas. And it's like, that's not going.
And
So
do you see how the statistical, like, let's say I'm heading into tax season, which for Schedule C or business clients is kind of year round at this point. So I'm just like, I'm in my day right now. I want to see of the 100 Schedule Cs that I prepare from now until, you know, 6 months from now, right? How many of those are going to have, whether the IRS calls it an audit, Darren, or whether it's categorized in some other way, in some other
yeah,
bucket, right? For the client point of view, it's kind of similar, right? Is that I'm having an issue related to the work that you did, and from the IRS, I'm having some kind of an inquiry, right? So if that's only happening 0.44% of the time versus it's happening 10% of the time, is kind of a different calculation, right?
correct. And that's where, from a client perspective, they think anything's an audit. If they get a letter, they think it's an audit from the client perspective.
Yeah, which isn't that somewhat of a perception as reality type
Pretty
of
much.
dynamic?
You gotta handle them with kit gloves and, you know, calm them down and everything. But that's kind of a practice point too, is that you know, don't ever, I talk about audit when I'm doing people's taxes. So, you know, and they're like, why do you talk about audit? I've had clients, they're like, my old accountant never brought up audit, or he said that like they don't happen very often. I'm like, I wouldn't trust an accountant that doesn't bring up the reality. They happen, you know, and it doesn't even mean anything's wrong. They still do random audits. I mean, they happen. You can just be the unluckiest person ever, and you get pulled for a random audit. No red flags, no anything. You just fell into, you know, when they're writing a new manual, things of that nature, they'll pull different segments, different occupations, and they'll audit a group of people to write a new audit manual specifically for that. And also, if you want to get better at doing taxes, they're all available online as far as the IRS audit manuals on how to audit certain things like real estate flipping, real estate professional, self-employed. I got a winery as a client. There's an audit manual for wineries. And I mean, it goes over there, you know, hundreds of pages long, and it goes through every question that the auditor is instructed to ask. And based on the answer, it tells what the auditor, like what the follow-up questions are, and like how to uncover things, and specifically what to look at. So you have full access to all the different IRS audit manuals.
So when you that's interesting, as that I also think that's a little bit counterintuitive to the average point of view. If you mention audits at the time when you're preparing someone's taxes, is that
I
um,
do it in a way to reassure them that I'm there for them, and
okay?
that it's not realistic for you know, for a tax preparer to look at somebody and say you won't get audited, or to not mention it. I mean, my job is preparing your taxes and also let you know what may be expected of you, because that's not fair to you if 2 years down the road they ask for you know, a mileage log, and I never brought it up
Gotcha. Okay.
at all, you know. Or to say that like, oh, you won't get audited and then you do. That's not fair, you know. So in that regard, I bring it up because I'm like, it's not, you know, you don't want to get a false sense of security, because it can happen. It can happen randomly. And so somebody that doesn't talk about it at all with their clients, you know, and I just say like, hey, you know, audits happen, but we're here for you. You know, we're open year round. I'll return your call when you call if one happens. You know, that seems to relieve them a little bit, that if something does happen, you know, I'm on their side. They're not left hanging out in the wind. I think that's better than saying you won't get audited.